Ladies and gentlemen, we now come to the valedictory panel discussion for the day on Emerging Financial Institutions, Landscape to Serve, Banking for Viksit Bharat. For this session, I am pleased to invite the panelists to the dais. Mr. M.V. Rao, Chairman IBA and MD and CEO Central Bank of India. Mr. Raj Kiran Raiji, MD NAFID. Mr. Sunil Mehta, Chief Executive IBA. Mr. Rakesh Sharma, MD and CEO IDBI Bank. Madam Harsha Bangari, MD Exim Bank. And our moderator for this session is Mr. Aniruddha Marathe, MD and Partner BCG. I request everyone to please take seat. We are starting our valedictory panel discussion. May I request Mr. Aniruddha to initiate the discussion. Over to you, sir.
Good afternoon, everyone. It's a real pleasure and honor to be with all of you in FIBAC 2024. We are towards the second half of the panel with, this is the valedictory panel. And it's my pleasure to have a very distinguished and esteemed experienced bankers along with me on this panel. Over the last 2 days, we have heard very different perspectives coming from no less than 53 different speakers. All of them are industry leaders, and we not only discussed the top-level issues that are concerning the banking and financing sector today, but we went to nuances. For example, we did not just talk about digitization as a theme, but we talked about how digitization can help in serving the customers in the semi-urban rural markets better. We talked about analytics and the data that needs to be embedded in underwriting models for MSME. We did not talk only about climate as a topic, but we talked about the strategic implications of climate for the banking industry. As I quote Mahatma Gandhi, he said that Sarvodaya, which is effectively the theme of this presentation, which is Viksit Bharat, Sarvodaya has to come from Antyodaya. This is what he talked about. And therefore, one of the elements that we are going to cover in depth today is all the discussions that we had so far over the last 2 days. How are they going to come together? How are they going to impact the Bharat? How does the Sarvodaya happens through Antyodaya? So with that opening, I'll request Mr. Mehta. Sir, you have seen the proceedings of FIBAC over the last 2 days. What are your key takeaways? What point has really stuck with you?
Anirudh, you raise a very valid question. How do all the stakeholders come together and endeavor to make Viksit Bharat by 2047? I think I'll begin with the input given by our Honorable Governor RBI, and he has given his very cautious advice, as well as he deliberated on the issues of growth. The first thing he narrated is that our growth story is intact. That means the projection of 7.2% of the GDP growth, even if the first quarter is not as good, is sustainable because of the various parameters. He said that a major chunk of lending has gone to the 18% in the agriculture sector, 14% in the MSME sector. So banking sector is channelizing the resources where it will create value for the entire ecosystem. The second important aspect which he deliberated upon was how do the entire financial stability works out, because inflation is very important and the interest rate and the inflation are directly correlated. The moment the inflation is high, the interest rate kept lower is very difficult. And in those scenarios, to make your products competitive in the international market also becomes a challenge. So I think the supply side constraint the government is addressing, the monetary side constraint the RBI is addressing, and the entire ecosystem will have to gear up to see that we are in the, and the best part is government has come out with limits. Now there are defined limits that we have to keep pack the inflation between the 2% plus minus of 4%. So that gives a roadmap for the entire system. Third important aspect he talked about, and he said, is the financial stability. Financial stability is because a growth, if it is uncontrolled growth, it can lead to more consequences than the benefit. And that's why I think the regulators proactively come out with certain where they found the things are going beyond, so some provisionings and all that. So what I mean to say is, regulator is quite proactively working for providing the platform. On the other side, he said that government has also come out with a very important plan to push the capex in the form of infrastructure, because even this year budget, they have put the 11,101 crore of budget for the infrastructure, and the big infrastructure pipeline, which will not only provide a lot of capex requirement, which will propel the employment generation, which will propel the secondary industrial development, because any infrastructure development will require cement, steel, and tertiary sector. So they will automatically give capacity expansion in those areas because of the infrastructure pull. Now, what has to follow, and which was the part, is there is a dearth of private investment into it. And to encourage the private investment, few of these steps which the government is taking and they are working on is how to do the ease of doing business, decriminalizing some of the corporate laws which were there earlier. So the entire ecosystem is being created. Now, as a banking system, we have our own challenges. And those challenges is like, when there is a growth, there's a greater challenges. The system has done exceedingly well during the last 2-3 financial years. But that leads to complacency because we don't know what is ahead of us. And that is one thing for which plan out. Some of the risk, and he said there are a lot of risk, Governor also said about it, the risk may come from non-financial sectors. It may not come from the financial sector because banking system has already experienced it, they have factored it, they have started managing it. But risk always come from the unknown sectors, and that can be cybersecurity, because sometimes the operational risk can even over with the credit risk. So cybersecurity risk, the various alternative investment and options risk like plight of deposit into the higher yielding areas. So they can also have different risks. So the entire ecosystem need to care. And banking system is the backbone of economy. If they are able to provide a support to all the sectors of the economy like blood vessels, then only the economic growth. So I think a calibrated approach, and for which the RBI has come out with a unified lending interface where the entire banking system can take advantage, ride on it, create the digital lending solutions for the masses, can provide a ease of doing banking, can propel a channelizing of quality credit because it will be underwritten through the algorithm processes, less human intervention, more efficiently through the lending space. And everybody has seen it that wherever it is a digitalization, that is the logical digitalization where these tools are available, they are used, they can provide all this. So in nutshell, I think every stakeholder has to play the role, the regulator, the government, the banking system, and the private players, because FICCI has members were also there. So the intention is that if we work in a tandem, I think India has the best potential, not only because we are growing well, because we have the largest younger generation in the world which can consume and produce both. And that is one positive factor which can provide a lot of fillip to our economy and achieving our goals of Viksit Bharat. So I think there are a lot of things which can play together.
Very well said, sir. I think many stakeholders need to come together. Mr. Rao, I'll come to you. Over the last decade or so, we have seen financial inclusion and banking services reaching the doorsteps across India, Bharat, metro, tier 1 to tier 6, all the cities. What are the new frontiers for the financial inclusion beyond just the deposits where we have made very significant progress? And sir, I'll just make it a little bit provocative. This is not a new story. We have seen this emerging over a period of time. What will really change? What enablers do you see coming in the market which will see a very different trajectory as compared to what we have seen so far?
Yeah, thank you. As far as financial inclusion is concerned, see, it was the individuals who are linked to the formal access to the banking services. Now, beyond, if you think, financial inclusion and keeping the Viksit Bharat, keeping in view of that, it is the inclusive growth that is what is required. From financial inclusion, that was the first step. Next step comes the inclusive growth. As far as the financial inclusion, all the banks have done very well, and they could able to establish what I always call as a DPKF, domestic peacekeeping force. And then coming to the inclusive growth, first and foremost, to achieve the dream of 2047 as a developed nation, we should grow consistently 8% over the years so that we can have and we can realize the dream of developed nation. Further, if you analyze further, the additional labor participation which is going to come into workforce, it will be on an average will be 6 million per year up to 2030, and beyond that it will average out to 3 million per year. So that is the absorption capacity that has to be built in the economy, so that this job creation that becomes a fundamental fulcrum for the growth and prosperity in the economy to realize our dream. And coming to your next question, what is, beyond this, what is there? That innovations continues to happen. Whenever these aspirations of the people, to match that, product innovation always happens. And as far as the products are concerned, now banks are becoming the one-stop shop where you will have the deposit products, you have the insurance products, you have the investment products. So all these products are within the reach of all the people. And technology, it is the biggest equalizer among the geographies. There is no division of any rural, urban, semi-urban like that. And also demographics. Now almost all age groups are maintaining these technology tools to access to the banking services. Going forward, beyond this is much more innovations that are going to happen on the financial products that will be made available across the country without any difference in the geographies.
So you talked about technology very well, and technology is an equalizer, levelizer, as you rightly said, for the customer base. But it is also a levelizer and equalizer for the competition. So, Mr. Sharma, I'll take your comments. How do you see the competition shaping up in this? Because if you see right now, especially in semi-urban rural areas, the predominant financer set is public sector banks, some of the NBFCs, then many other small financiers who don't really have that kind of a technology strength. For example, MFIs, for example, cooperative banks, or urban credit, rural credit corporations. How do you see the competition changing, sir? Do you see the large private sector banks, the other private sector banks making a very substantial inroad and build their capabilities and presence in these markets? How will the competition structure change?
So thank you. Actually, first of all, I like to say that, if we have to go for that, Viksit Bharat 2047, which we are talking about, 30 trillion dollar economy. So we have to go for inclusive growth. Now, historically, the public sector banks and the MFIs and the other NBFCs, they were basically funding the requirements of these rural and semi-urban areas. That for mainly it is basically because of their, the outreach which they have. Now, in fact, if you see the public sector banks, earlier they have around 55 to 60% of the branches in rural and semi-urban areas. Whereas the private sector banks, they have around 30% branches in rural semi-urban. And then, the earlier issue was that, the cost, it was not cost effective. Also, NPS delinquency is very high. Now, if you see now, if with the lot of evolvement of technology, now the picture is changing totally. Now, in fact, because of digitalization, because of the financial literacy, although still lot of work has to be done for financial literacy, but still, it is improving. Education level is improving. So now this digital technology is taking the major part. So with this, in fact, the private sector banks, they are adopting latest technology, and because of that BCBF channel, in fact, the various outlets which will be increasing. So now even the private sector banks, large or medium, whatever you say, all will be having this, participating in the financial inclusion. And in fact, if we have, again, I will like to say that if we have to achieve that level $30 trillion economy, all of us, we have to work together. As far as competition is there is a lot of space. In fact, a lot of unexploited space is still there. And of course, most of the banks, they will be coming out with their various, niche products. And niche products will be there. There is possibility that one bank may take over the share of the another bank, but then there will be another scope. The other bank can have share in the new products. Main thing is that, we will have to devise the products according to their needs. Now, if you see the lending part, because yesterday RBI governor had also indicated that ULI which had come. So this will open really new areas for growth. In fact, all this facility will be made easily available in such a way that this inclusive growth is possible, I think, and the competition-wise, lot of space is there as such, and lot of work to be done, and all, I think, will be contributing towards that.
Sir, a follow-up question. The ability to invest in technology for the large banks, whether public sector banks, private sector banks, large financial institutions, large NBFCs, is very high as compared to, let's say, the cooperative banks or the MFIs that we see, or even some of the small banks. Would this then result in the more organized, larger financial institutions actually substituting some of the smaller financial institutions in the market?
It may not have full impact, but my personal opinion is that this is basically need-based. Without technology, you cannot do it. Now, there are different types of products based on the size of the institution. Different products, APIs and this technology and the various products are available. Large banks also are making investments. We are also making medium-sized banks like us, RDBI Bank, we are also making a lot of investments. In fact, through that BCBF, apart from this, now this mobile and all this technology is so cheap. Slowly technology cost is also coming down. So I don't think that should be a hindrance. And then other than that, for IDBI Bank, I would like to say that earlier, till 2 years back, we had one corporate BC who had 1,000 outlets. Now, in the coming 2 years, with the BCBF channel, we are planning to have almost 5,000 outlets will be there. So this technology, yes, initially cost will be there, but finally, in long term, if you see, it will give the benefits.
Yeah, just to add, from the other perspective, because of large number of small players, and everyone recognizes their geographical reach and also specific to that geographies. And there is a model that is evolving is pay and use models. It is not that everyone has to invest in technology. Someone will put everything up to date and just they can go and plug and play model. That is also evolving now.
Very interesting point, sir. I think, Rai sir, I'll come to you. Infrastructure development in the broader Indian market, broader Indian geographies, is going to be a very, very key enabler for this development to happen. We talked about private sector investment, we talked about job creation, right? For that, the basic infrastructure also needs to be developed. History in the last at least 20 years has shown that many of these infrastructure projects are not so viable. It's not something that people invest very proactively. Perhaps that needs a very different approach. And as NAFED, you are thinking about it. What do you see, sir, happening? What will be the new things that we will see in these kind of opportunities, markets, products?
Yeah, when it comes to infra, generally the past memories are not that good. So and maybe 90% of the audience here also when they hear infra. So they may not like it as a opportunity, many of the bankers also, because we are the people who are there in the system at senior levels, the people who created the problem, who actually suffered the problem, and also a team which solved the problem. So we have seen all the
That's
people,
well said, sir.
the people who are sitting here, actually, all of us are in that league. Actually, there are people who were first part, somewhere in the second part, but then we are there in all the three parts. So we understand it better. So I think infra is not, and then as bankers, because you said the non-viable infra, as bankers, we are not in the job of making a non-viable project viable. Yes. Moment bankers get into that business, we will have problems. Because that is not our job. It is the person who conceive the project and other people who have to think what is viable, what is non-viable. And if non-viable, see there are ways the government or other concessionaires who can make non-viable project viable. Viability gap funding is one of the areas, basically. If the project is assessed right, like, recently you have seen an announcement, cabinet announcement of viability gap funding for offshore wind project. Offshore wind, even though PLFs are quite high, but the investment is so high that they will not be able to price it right, the final power price. Now, if the normal wind fellows are able to sell power at 3 rupee 50 paisa, here the cost may be 4 rupee 50 paisa or 5 rupees, which DISCOM will buy. So now that is where actually it is non-viable project. So now we are not in the business of making that power 350. So that is the people who conceive, that's why the viability gap funding and other things come in. Then there is another product called blended finance. Now this is something, there is a lot of work going on, even though we have not seen much of that here, because particularly on the green financing, climate related financing and all that, this is how the projects can be made viable by way of blended finance. Internationally there is a lot of money available, what we call GCF and other things. A lot of money is available which can come flow to the country, for which we need to have the right taxonomy and right governance structures to give the confidence to investors the money is used for the right purpose, and the certifications and all that have to be in place, where our country is evolving the taxonomy and other things. So when this happens, actually these are the two products which come to my mind at this point of time to make the non-viable projects viable, which we can definitely make, but not a banker's job. But infra per se, when you mention, actually do we have a choice not to do infra? Because again, what Mr. Mehta mentioned from the governor's speech and other this thing, and where Rao Saab mentioned that we need to grow at 8%. I'll tell you, our assessment says 8% is also not enough. We need to grow at almost 9 to 10%. Because next 2-3 decades are the golden decades for this country. And if we miss these 2-3 decades, we get trapped in that what we call the middle income trap. The country gets trapped. Then we will not be able to come out of that. Some countries have already seen that actually happening, where we thought in the last decade they will become developed economies. They didn't become because they got trapped. India actually has to grow, because why it is important is, one is as mentioned, the kind of manpower we have, which is again coming to the job market every year and all that, and the potential we have. And even though we are going to be the third largest economy, few years down the line, we are already fifth. But that is only for the purpose of large statistics. You and me, citizens of the country, what benefits us is actually what is in my pocket. Now, if you look at the per capita today, it is less than $3,000 US. One of the lowest actually. When we are in the top 5, we may be in the bottom 30, 40 when it comes to per capita, because that is where the quality of life comes in. Now, if you are to reach a developed economy status, we are talking of 2047, actually, where we will be, that is more than $13,000 US. Is it possible? Yes. But then I think if it has to really come, then we may have to grow very, very fast. And all the policy advocacies and the investments have to flow in. So now when we talk of infra, again, we should not get stuck with what has happened with us earlier. Now, enablers are already there. Actually, again, to quote certain numbers, on the road side, 2015-16, when the bankers were reluctant to lend to road, the HAM product came. Now today, HAM product, there is so much of competition. Now 60% of incremental credit to infra from the banking system is flowing to only road sector. Because everybody thinks it is safe, everybody is competing there. Now what has happened, we all talk of risk around infra. If a risk in particular sector is high, it should reflect in higher interest rates naturally, because that is how the risk pricing happens. We did a study. The average lending rate for infra in the last 2-3 years is 8.75%. Because this struck me, because one of the big NBFCs, again you have to take this, banking industry has an exposure of only 13 lakh crores to the infra sector. Whereas NBFC, IFCs have much larger share. They are bigger than us. They lend to infra bigger than us. One of the large NBFCs is telling, if infra is so risky, I should have made a lot of money. Average lending rate for infra is 8.75, and today average lending rate for housing is also around 8.5. So that means the bank, it is not one person. It is a whole system, NBFCs, banking put together. If they are pricing infra at 8.75, even though we superficially talk about the risk, but actually we are pricing it very low. That means today, in the last 5-6 years data, infra defaults are almost zero, and bankers' perception about the risk about infra has already changed. It is reflecting in the pricing. So I think maybe the talk around the senior levels about infra being, risky and all that, because a lot of enablers have happened. Similarly on the power sector, the solar, wind, the hybrid structures coming in, and today look at the top platforms on the renewable side. Investment to the extent of 90-95% of the equity of those companies are from PE funds and the foreign funds. If they are so confident about country, why we are negative? Somewhere I think the perception has to change. And one last element I'll put in, the long-term money, which should be made available for infra, is already available domestically. Earlier we were looking at investment from outside. Today, assets under management of insurance, pension and PF put together is 115 lakh crores. And scheduled bank deposits as of now is 210 lakh crores. So already insurance, PF and pension, the long-term money available domestically is more than 50% of scheduled bank deposits. And they are growing at 20%, and the bank deposits are struggling to grow at 10%. And incrementally, they are getting more money from the banking system. Now, insurance typically has to invest 30 years and above.
Yes.
Now, GSECs are the only source where they were investing. Any 30-year, 40-year, 50-year bank, they are the people who invest. There is nobody else. I did a 20-year issuance now. I was surprised by the kind of response I got. So what I'm telling is, domestically there is so much money available. We need to create the enablers to give the safety to them, because there is domestic money available. Because if you are to grow at 9%, 10% kind of infra investment, now 11 lakh crores, somebody mentioned about the infra allocation in the budget. Now, is this sufficient? No. Because 7% growth sufficient? No. Now 11 has to become 20. Where from it can come? Foreign funds is one source. But then domestically what I'm trying to say is this insurance, pension, PF, if you are able to build the right policy advocacies around that, right structures around that, that money can make difference for this country. Domestic savings are good enough to take the country forward.
That's a very fantastic insight, sir. And I think you talked about many enablers. I'll just ask a follow-on question to sir. One of the important enablers that we see changing in the last few years at least is data, right? And sir, you have done and you have seen a lot of data becoming available specifically in the context of infrastructure finance. Would you like to shed some more light on that?
We spoke of technology, just a background. Actually, but for the credit bureaus, where would have been these fintechs? It is only credit bureau which came in. Today we are able to do in 30-second loans, 60-second loans, because the data being made available. Similar thing in infra has not happened. Infra, there is no data. Actually, when I was developing the pricing, because NAFID is a new organization, when I was looking at the pricing formula, we want two numbers, PD and LGD. Nowhere it is available. And whatever is available is again lopsided data. It is not correct data. So we have taken that responsibility to build a data repository. We are already working with many of the government departments so that this data should be made available. Now actually, by recent guidelines of RBI also spoke of about 5%. Because that is the number, generally when you look at 10-year, 15-year data, that's the number which is on your face. But is 5% true? Now talk to the bankers, HAM, zero default, solar financing, zero default. Now where is 5% coming from? I know, actually, it is less than 1%, I'm telling you. But then you don't have data to talk to the regulator. You need to have the data Actually, we have started the exercise of picking up about 400 NPA accounts from the system and trying to arrive at some numbers. Hopefully, we should be successful. My team is working on that. Maybe we will be able to talk about it and put out those numbers so that it's not only data, it's a verifiable data.
Yes.
It is not that I can quote any number and get away with. I should have a proper process of combining that data and putting out that data, which NAFID will do for infra. I'll tell you, once these data are in the public domain and as the data repository comes in, actually it will be good. It will not only help the lenders to take the correct call and price the product right, because in infra you cannot take it in one bucket. Infra, again, there are asset classes.
Yes.
With the different asset classes have to be priced differently. You can't have one size fits all. Actually, we need to differentiate, and that can come from good data, good quality data, good verifiable data. Another added thing is when we spoke of blended finance and other foreign funds are coming into the country, they need the data to invest in which sector which is safe and all that. Bond market development. Actually, bond market development cannot happen without data.
Absolutely.
So this is, now it is all name lending. Now today, good company coming, because of the name they get the investment, not because of the data.
Very well said, sir. Ms. Bangari, I'll come to you, and I'll switch gears a little bit. One of the characteristics of Viksit Bharat will also be India's presence abroad. You are a conduit of India's credit programs abroad. As we grow in our stature, I'm sure that we will have a much larger presence of India in these international markets. How do you see that picture evolving? How do you see, as part of Viksit Bharat, where, we will have those opportunities?
Yeah. Thanks, Anirudh. A very good afternoon to everybody. So since you started with Viksit Bharat, maybe I can start my narrative with Viksit Bharat. So when we look at Viksit Bharat aspirations, and I'm going to restrict myself to the exports aspirations of the country. So today, our share of exports in global businesses, exports is 1.8%. Now, our aspiration is to become at least 10% by 2047. If we put these in numbers and we say timelines of up to 2030, we are talking about exports of $2 trillion. Now, how does it happen? It's not going to be easy, because essentially what it would mean is to reorient our export basket. Because if we continue with the same export basket, maybe we could scale up our operations, but we are not really going to get that type of jump which is expected. Now, traditionally, the government of India has schemes which encourage Indian project exporters to execute projects overseas. So that program, I would say, gives a big fillip. So we have, I think we've covered all the countries in Africa and Latin America, and we have more than 300 lines of credit where we have committed more than $30 billion. So this is something which is coming from the government of India. When we also look at project export space in India, and I'm very happy to mention that with a modest beginning in 1970s, today Indian companies, and especially the Indian project exporters, are the largest suppliers of projects worldwide. So we were also looking at data which is, there are lots of projects which get funded by the multilateral development banks like the World Bank, the AFDB, and the others. So there, if you look at Indian company share, it's more than 11%. So I would say that's a good direction, which sort of makes sure that the Indian companies or the Indian project exporters export more. There is, of course, a ever-evolving landscape, so we cannot become immune to what's happening in the external environment. So I think lots of changes happening there. The developmental priorities of the partner countries, which Government of India also, achieves the objective of economic diplomacy through these programs. I think that's going strong. We are also seeing, in addition to the large corporates who participate in these contracts, we are increasingly seeing emerging in the medium and small space where the companies are emerging as a bedrock. So we are seeing lots of innovation happening, new sectors coming like defense, aerospace, communication. We are also seeing our partner countries becoming more sensitive to where they should spend their money. Because most of these countries, and especially in the past 2 to 3 years, have had some fragile fiscal situations. So there again, we are seeing lots of direction towards productive assets, I would say, for example, manufacturing facilities, or lots of inclination towards green sectors. So I think the way we finance, especially the projects of Indian companies overseas, has evolved over a period to align itself with the developmental priorities of our partner countries, as well as the evolving landscape of our own Indian companies and their competitiveness.
That's very interesting perspective, ma'am. Very different from the focus inside versus the focus that we are going to have outside, and that is equally important for the development of the country. If I look at Indian banking system as a whole, we have historically relied on internal deposits, the domestic savings. Mr. Sharma, I'll request your thoughts. There has been a debate, multiple news articles. This has been a focus in this area, this FIBAC as well, that deposits growth is diminishing, right? People are talking about the fact that in metro tier 1 large deposit markets, the deposits are going to other avenues such as mutual funds or other areas. As we go deeper, let's say tier 2, tier 3 markets, and as they start developing, which is currently the bedrock of our deposits, do you see that trend shifting there, and that will have second, third order repercussions for the banking industry as well? How do you see that picture changing in the medium term, sir?
Okay. So first of all, let me say like this, that except maybe to some extent in rural areas, but up to semi-urban area if you go, all are quite literate persons and everybody is using all types of facilities. Now most of these products are either digitally advanced products or whatever facilities are available to everyone. So if you see like during the last 10 years I was seeing, the share of deposits from urban area continues to be around 21%. Rural, it is around 10 to 11%. Only semi-urban part, during the last 10 years, it has increased by almost 1.5%, from 14.3% to 15.7%. So more or less during this year, this deposit pattern has not changed. So as such, we cannot say that, as of now, they are not investing in these products. So they, as of now also, they are investing in these products. So this, only what we have to do is, of course, when more or more further, I had discussed about the literacy part, of course, this effect will come to some extent. But more, in fact, the issue which I am seeing in the deposit mobilization now, it is more going towards the demographic system, if you see. Like, particularly if I talk about my bank, the deposits from senior citizens which we were receiving. So the share during the last 1.5 years, 2 years, it has increased by almost 1.5%. And their deposit growth is coming much more than this thing, than the younger population. Maybe I think they are investing more in these type of products. So going forward, now you see, now what will be the impact? So what I was thinking is that, when we go for more and more inclusive growth, financial inclusion, so what exactly we are doing? We are not only trying to pick up deposits from there. The bankers and the entire government and whoever the involved parties are there, what we are trying to do is to increase their income. Now, as of now, if you see most of their income is going towards the consumption part. Actually, they are yesterday also we were seeing they are the net borrowers basically. In fact, more or less. So now if we, the bankers and all these things taken together, all MFIs and financial institutions, we go for more or more lending so that we are creating more and more opportunities for them to earn more income. So by lending is not for just for consumption part. It is being done for the productive part. So yes, this will help in increasing their income. So I foresee some more opportunities coming there. So everybody has fundamental right and the option to invest in any product where the bankers will have to go for more, maybe like joint family products. We can, like already bankers have started giving some additional benefits like salary package, they give insurance benefits and all these things. New products will have to devise. But ultimately I feel, despite the fact that these deposits somewhere go to the other parts, but deposit potential will not decline. There is good scope for increase in deposits.
Very interesting point you're making, sir. What I heard you saying is, today the lending that is happening there is to create productivity and therefore income. That income will lead to more saving, and that will continue to be the source of deposits for us. That's actually a very, very interesting.
Exactly. That's what, in fact, Because now they are some simply hand to mouth. So because a lot of indebtedness is there. So once they create more income and this, literacy happens, that, and we also go to them that what are the savings being they can save for future. I think that will have big potential for deposits.
Just I would like to come in between, just for further insights to this. We all know as a public sector banks or banks, the deposits held by the senior citizens is higher proportion than with the people who are in the young age. This brings one more insight, how society is changing. Yesterday it was a discussion. When generations change, culture will also change. The senior citizens, so-called, the people who are there during their good days, at that point of time, philosophy in the society was securing the future. So they used to save, and they used to keep it for, yesteryears. And that was the way it was seen. Now, new generation demographics changing, this culture of security has changed to culture of securitization. Securitization is just you are discounting the future. At the age of 26 or 30, you are being provided with a home loan, you are provided with all types of loans, whatever you want. If someone has taken the loan of 30 years, banks have discounted that particular borrower's future of 30 years. So that is securitization. So because of this increased tools and available things, their standard of living has to be maintained. And further, the deposit which you are keeping in public sector, the returns are not remunerative. And in other way, they are forced to see other risky areas where they will get the higher returns. This is how that flight of deposits are happening. But this is not going to stop. This is going to increase further. Now it is for the banks how to make their deposits attractive, not only in terms of returns what we give, but also in terms of additions, what they feel in their life cycle that will be much more beneficial to have this type of relationship with the banks rather than being the investor in risky areas.
Absolutely, sir. Very well said. I think the relationships. Sure, please go on. No, sir,
you have another round to go. Actually, I will bring, because this is a very interesting discussion, because there is a lot of discussion going around this. I'll bring some numbers first, and then I'll give other perspective. 23 data, the financial assets created out of the total this thing is about 29.6 lakh crores. This is the financial savings, which converted to financial assets. This is 23 authentic data. Out of 29.6, 11 lakh crores came to bank deposits. 12 lakh crores went to the other fund, what I said, insurance, pension, and PF. That is slightly higher than the banking. So 23 gone. It is the other 6 which get distributed in mutual funds, equity, currency in hand, and many things actually. So the proportion of equity and mutual fund in these savings is only 2.4 lakh crores. I think we are making too much out of it.
Absolutely.
So I think because 11 lakh crores is still flowing to banking system, 12 is still flowing to the insurance, and which is available for long term, only short this thing. Because this is again, like from Sharmaji's data, it is the urban side. And if you look at the deposit composition also, institutions, trust, government still carry a large chunk of deposit in public sector, which comes under the urban category. And that is where some movements have happened. Because government has changed the system and all that, because now those money which used to flow to the banking system from the government is not flowing. So this is something. So need not worry too much, because like as the post-COVID, there are certain behavioral pattern changes. Now again, I think it will stabilize, and I think banking will get its share. Actually, it has not changed that much. Another interesting element, because I worked on both sides now. Almost close to 36, 37 years in the public sector space, and now more of a private space, working closely with most of these funds and private equity. Public sector has to relook at the way they have done technology implementation. Because public sector banks, all of us did that. Basically, we were always trying to catch up. It's the private sector which comes in and brings technology, and public sector looks at it, and maybe that's the way we are. We are only doing catch up. But we have caught up very well. Like today, most of the public sector also has almost the same products what private sector has. But has it delivered the same returns like private sector? No. One question which we have to relook at ourselves is, with so much of technology, whether our efficiency has gone up in public sector. I think this is something which we have to examine. Another thing, when we go to the branch level, if the technology, if the investment is so high, the efficiency at the branch level should have gone up and the service level should have gone up. But then when you go to the branches, people are crying that the load is increasing. If the technology has played that role, why the load is increasing? I have no answers for that. I am just putting this as a challenge that I think maybe existing public sector bankers have to look at it, whether this much investment in technology in public sector, has it resulted in efficiency improvement and reducing the load at branch level? If it has resulted, then the branch would have given a better service to the customer, because service levels are another issue. And the technology should have been the great enabler. So somewhere we have to relook at the way we have implemented technology.
Absolutely, sir. And I'll request Mr. Mehta to come in.
No, just one more thought, just
sir,
add to this,
keep it brief, please.
This one, why I am saying this is, as far as the public sector is concerned, many of the banks have to really relook at the investments, but it is the survival. It is not that excellence in service or improving the efficiency, but it is the survival part. But coming to the other aspect is, as far as the public sector, HR practices and business practices, that has to align. Otherwise, this topic will never end.
Absolutely. Mr. Mehta, you are also the chairman of PSB Alliance. And one of the important drivers of delivering high quality and efficient service at acceptable cost is also a way by which banks, and not only public sector banks, all banks can collaborate. What kind of initiatives do you see fructifying which will help the banking universe, the banking system, to come out with more collaborative approaches to improve quality and efficiency?
Yes, of course. You raise a very important, vital issue, and even DOS is closely working on it. Time is changing, and public sector banks all need not reinvent the wheel every time. Whenever a new technology, as rightly said by Rao Saab, that sometimes we have to catch up for survival, and if everybody start catching up with a separate set of systems, it can not be cost effective. But if the resources are pooled, then it can be cost effective. So one of these scope, which is the third pillar under our ease reform agenda, is collaboration within the public sector bank to save the cost, optimize and take the advantage of collective wisdom, the collective knowledge, because a larger bank like SBI may have a more import system like PNB, and then maybe smaller banks may be requiring more hand-holding. So within the cohort, they can work together. This is the basic philosophy for this PSB Alliance. As regards the production services, I think all the banks are selling their properties into the market, and everybody is finding a different ways of doing it. So one of the way, what the public PSB Alliance, which has been mandated by the government, is now all the auctions under public sector bank will happen through the eBikray platform, which is a collective platform, which every bank can post their properties. And now it is open for private sector also, because it's a common platform. And a lot of people in the market do not know that the stress asset sale by the banking system goes at a much lower price than what is available in the market. And if that message is marketed, and if that platform is made efficient on the lines of, say, tiger.com or this 99acre.com or the magicbig.com, I think this can bring a lot of value in three ways. One thing, a customer getting a housing or a property at a lower rate, banker having higher realization, because when the market is opaque, people do not know about this system, then the price realized is lower, because people go for cartelization, very few bidders come, and if the bidders are not there, then we every time go and keep on reducing the prices, and the realization goes down. So to maximize the returns, I think that is one platform that is being developed and will help the system. Another thing important is, after the Satyam fraud, this was made mandatory that every auditor should go to the individual bank and obtain the balance confirmation certificate, and one corporate may be having more than 100 accounts in different branches. It becomes practically impossible for them to do that. So this is one solution which is being worked out. We have onboarded NESL, which is a regulated entity of IBBI, which already is a repository of data for defaults and the credit, to create a platform where the balance confirmation certificate can be generated. This has been vetted by Ministry of Corporate Affairs. We have already reached an MOU, and that may be a thing which will facilitate a lot of, reduce the burden of the branches also in giving those certificates, and of the auditors also of going to the branches, because digitization will be made easier and cost effective. Similar such initiative like doorstep banking is one of the requirement of the regulator. They say that every citizen above 75 years of age is entitled to get a service at their doorstep. To create an individual's serving individual customer from the individual branch is not cost effective. It's very difficult for a bank, because cost of hiring in a bank, public sector bank, is much higher. But if the resources of that particular geography is pooled and it is serviced by some agent, so I think we have onboarded certain service provider, BC companies, who will be providing these services for all the banks. They can onboard and provide these services. These are a few of the collaborative steps which we have already taken, and I think RBI is also considering our option of a community cloud, because the threats of everybody knows that geopolitical issues sometimes can lead to captivation of the data, and then we need to have a data independence and maybe have something local. So we are working on that. So similar solutions are being worked out, which will be utilized not only by the public sector bank, in times to come by the private sector bank, but the public sector bank, since they are creating the collaborative, at least they will get the cost advantage as compared to the other sectors.
Absolutely. Ma'am, I'll come to you. It's not just about collaboration among banks. You know, DFIs like yourself, how you can collaborate with the banking system, and especially in let's say, whether it's an EXIM context where people are investing abroad, you are helping MSMEs, large corporates invest abroad. How do you see the collaboration coming together between DFIs like yourself and the banking system?
Thanks, Anirudh. And a very relevant question, because increasingly when we talk about growth, and most of our corporates have very successfully deleveraged, there's also a thought process where we should not really encourage Indian companies to borrow more. And even if they, so increasingly we are looking at financing instruments which do not actually lend money to the companies, but provide finance in such a way that either the finance goes to the buyer of their goods and services, or we start talking. So the idea when we talk about collaboration is, of course, one on the Indian banking side, because the Indian banks, especially the PSBs, they are so entrenched in the tier 2, tier 3, and if I may say tier 4 and so on cities. Yes. And the ultimate connect of the exporter or a company or a small company who wants to do business, especially looking at overseas businesses, their first port of call is that. So for Exim Bank, it becomes very important for us to collaborate with the banking system, because without that, frankly, there's no way we are going to scale up operations. Similarly, we also need to collaborate with the banking sector overseas, you know. So typically we need to, all of us have very good correspondent banking relations, very wide network. And how do we leverage that? Because over the years we've got experience about how the local banks in some of the African countries or Latin American countries behave, and how we could sort of step in and provide that comfort to the Indian company. Because we were talking about COVID behavior. So one behavioral characteristic which we saw was that increasingly most of our companies have started looking inward. So, you know, there are so many instances where corporates were happily doing business with everybody on the globe, and during COVID and post-COVID, maybe the Indian economy has been very dynamic and it provides enough domestic markets to them, but there has been some risk aversion. So that risk aversion also, as Exim Bank and in collaboration with the banks, the idea is how do you encourage Indian companies? Again, you know, we need to look at the evolving landscape. We look at project exports. Middle East has been the region for project exporters. But I don't think with the development happening in that region, it always makes sense for Indian companies to start looking at newer markets. Similarly, newer products. We are seeing lots of progress, especially in defense, communication, and these new age sectors. So there again, how do we bring in some expertise and try to take the risk of the Indian banks? Factoring, very nascent. I have very high hopes on factoring business, but I think it needs to take off, because if you look at the statistics, when we look at Indian trade, international trade, we don't see any reliance on factoring as a financing product. Where if you look at Europe, for example, they are, I would say, they have a matured economy. They mostly rely on that. So I think the idea is to bring in new instruments, try to see if we can take on some of the risks which typically we leave the Indian companies to handle, especially the off-takers risk in the foreign markets.
Very interesting. Taking the collaboration and attracting the investment theme forward, Mr. Rai, you also extensively deal with MLBs, multilateral banks, right? Channeling their investment, crowding in their investment is also going to be very, very important, along with the collaboration among banks and your interaction with the different stakeholders. How do you see that place, that evolving, and also, some of that funding also goes to some of the government projects, right? Urban bodies. How do you see that space evolving, sir?
This is a very interesting space because actually when we talk of Vikasit Bharat, it cannot happen without the urban infra growing. When we talk of urban infra, many times we think of large infra. Urban infra is generally the drinking water, the sewage and waste treatment, the electrical mobility, housing, healthcare, education. These are the basic things which are needed. And the urbanization is progressing as a very fast pace because ultimately the population which is engaged in agriculture, unnecessarily because so much of population need not get engaged in agriculture as the productivity is improving, more mechanization and a lot of work has happened. So naturally it has to move to the urban, which China did very successfully. And then as the population moved to urban area, then these are the challenges in front of us. One of the problems is the urban local bodies. I'll come to multilateral later. One of the problems with urban local bodies, in India, the amount of revenue available for urban local bodies is only 1% of GDP. It is about 6 to 7% in Brazil and South Africa, which are can compare because they are in the development phase. 5 to 6% or 7%. Here it is only 1%. So with 1%, urban local bodies are seriously deprived of revenue, and they also have an issue with the governance. So that's why the multilaterals, generally multilaterals have a developmental agenda. Now 2015 World Bank came with that scheme of Clean Ganga, National Mission for Clean Ganga, which has successfully worked, actually it's still working, where the cities around Ganga, the sewage treatment, then the waste to energy things and all that which has come up and successfully getting funded. Similarly, when we were interacting with Tamil Nadu government recently, they have done a similar project, actually again supported by the multilaterals, around some rivers and all that, which are near the cities. So these are very important. Multilaterals are playing a role. What multilaterals do is they kickstart a process. Basically, Clean Ganga is a process where they bring international consultants and tell us that this can work. The country has to learn and then use the domestic resources to take it forward, because our country cannot be handled by multilaterals from end to end.
Sure.
Actually, we have to learn our lessons and identify the right projects. Recently, one of the state government, waste to energy. Now, waste to energy is such a product, actually, because it works on the concept of polluter pays. Because if this has to be successful, polluter pays. Like, we have drinking water in water bottles for so many years. We think 100 times before paying 20 or 30 rupees for a liter of milk, but we don't mind paying 20 rupees for a bottle of water. And this is the biggest problem. Now actually these people who produce that plastic bottle, this waste to energy fellow who processes this plastic and converts it to energy can generate a certificate, and if it is made compulsory for whoever producing the water bottles, that they have to buy these certificates for having reprocessed the plastic, then it is self-funding. It is self-funding. Actually, this is how multilaterals are telling you these are the technology, this is how international is working. So whenever we work with multilaterals, we learn a lot of things because they bring that international experience which they gained over 30, 40 years here. So if you look at only the funding part, whether that funding will solve the problem, no. But knowledge, yes, will solve the problem. So there are many projects actually, like we work closely with the ADB, AIB, World Bank, and many of them which are investing heavily. Millions of dollars are flowing in particular sectors on this. So, but then it is more on urban infra, even though they are working on the energy side also, but it is more on urban infra. Urban infra is the most interesting piece to work on, and next piece of growth can come from urban infra if we invest right, get the governance right. Just to put a number, we have 4,000 plus urban local bodies in this country. because they are the third tier after the central and state, 4,000 plus. Out of that, only 476 bodies have a population of above 1 lakh. And another data says, in 2019 to 35 period, out of the 20 fast growing cities in the world, 17 will be from India. You know, this is something which is internationally available data. But then if that has to happen, actually we need to invest and get the governance right, get the product right. Muni bond as a market, if you see, it has not evolved. Only 11 municipal corporations are able to issue bonds till date. Only 11 out of these 476. There are about 90 plus local bodies who are investment grade. Out of that, only 22 are A or above. And for the investment to happen, they should be AA plus. So we are looking at a credit enhancement product also from the NAPFID side. So this is how the municipality urban infra financing is happening.
Interesting. Mr. Rao, I see mic in your hand and I thought that you have a few comments to add.
Nothing. Actually, just to share with the audience, you know, when PSB Alliance issue was going on, just I would like to share that till now, we had that UPI, which is the product of NPCI. At one point of time, it is the brainchild of IBA only, that along with the RBI, it went out, and now it is a very known product, that is Unified Payment Interface. Now, second leg that is coming, the Unified Lenders Lending Interface. In all these things, the infrastructure of the banks are being used. And there is a thought process in the PSB Alliance itself. Once payment space is done, now lending space is also being covered. Third most important aspect that is left out is the recovery. So with the bank balance certificate process which is now put in place, now unified recovery interface, that is the thought process that is going to come through PSB Alliance, so that all the bankers will get the comfort that once they lend, this is how process will run for recovery also. So there may not be many challenges, the way our credit costs increasing or collection management processes are adding to the cost, that will also come down. This is only just I would like to share with the audience.
Excellent. Thank you so much, sir. I would see if there are one or two questions from the audience. We don't have too much time, but one or two questions if anybody has a question. Ma'am, you go first and sir, then you go second.
Yeah, so respected panelist, my question is little different. Like we are talking about the Viksit Bharat. So this is in a point of women on the rural areas. Like I work more on the skill side and giving the skilling and doing the employment for them. Maybe it's an entrepreneurship also, which I am doing it. So I still see, I work with a lot of PSU banks and the Ministry of Skill, Kaushal Department and all. So some of the areas where you are giving the schemes, but the awareness I see like that is lack of awareness. So what are you doing on that, and do you have a ombuds for that? Like somewhere some things is missing, where they go, and you know, this is my question, and I think there is something is lacking still. We need to work on that, because the latest project which I was doing with...
Understand, ma'am. Thank you. Let me have Mr. Mehta respond.
Yes, okay. So I'll take your question. I think you raise a very relevant issue. The FM has already come out with the apprentices scheme in our union budget. Just yesterday we were discussing with the Secretary, Ministry of Corporate Affairs, how to create a special apprenticeship program for the banking system, for the people, especially those who are not IITians or very highly qualified, or those who are not son or daughters of the government servant. So these type of people who have qualified, how to create a skills for them, and with a special emphasis on women for that. So I think the banking system is gearing up. Government has already come out with the announcement, and maybe shortly you will hear from all of us that we are coming and joining those programs.
Definitely, sir. Thank you very much.
Thank you, sir. At the front.
Good afternoon. My name is Vineet Nahata. I'm from Powergill Treasuries. My question would be for Mr. Rajkaran Rai. Sir, you mentioned that the lending of infrastructure projects happens to be at 8.7, whereas the housing sector is getting funded at 8.5. As far as the borrowing of infrastructure companies is concerned, it is normally 7.35 to 7.4. Now, as far as the fixed income debt issuances are concerned, there is a good liquidity in the market and the risk perception is low. But for instruments like InvITs, which are issued by, say, issuers like Power Grid, National Highway Authority, and one Bharat Road Infra also had recently come out. REITs, where real estate happens to be the underlying, they have done well. But the secondary market liquidity of InvITs, where infrastructure, core infrastructure projects is involved, it's practically missing. There are no buyers in the secondary market for these InvITs, and some of the InvITs, they have undergone capital erosion.
Can you come to the question, please?
Got your
So my question is that why is this dichotomy between the fixed income and these hybrid products like InvITs? They are not doing well.
Yeah. First of all, there are very few publicly listed InvITs which get traded, very few. So it is the market actually work with the size. So we have not created that size. InvITs are very successful. As of now, actually, the equity in the InvITs are held by mostly private PE funds and pension funds from abroad, mostly. Very few are domestic, basically. Indian insurance companies and other funds are yet to look at it. There are very few listed companies where it get traded. But again, most of those traded funds also, the assets basically, are toll road assets and kind of things which public do not have the right perception. But then don't form the opinion that when NHA did a InvIT, you should have seen the retail participation. It got subscribed within 1 hour. So if it is rightly sold and if there is a comfort, retail investors come and invest. So don't get another, but then we have not created that size yet because InvITs are mostly private held as of now. Equity is all more private funds. So difficult to draw a conclusion at this point of time. It will gain traction.
Thank you, sir. Ms. Pooja, if you can come up and take this forward.
Thank you, sir. Ladies and gentlemen, now I request Mr. Gopal Mulli Bhagat, Deputy Chief Executive IBA, to propose the vote of thanks. May I invite Mr. Gopal Mulli Bhagat to the dais, please?
A very good evening to all of you. Dignitaries on the dais, Shri Rakesh Sharma ji, Shri Sunil Mehta ji, Shri Rajkiran Rai ji, Shri M.V. Rao, and Madam Harsha, and our Anirudh Marathe ji from BCG. 2 days of intense deliberations on overall theme of Viksit Bharat, starting with address of Governor RBI, Secretary DFS, have been very encouraging, and to achieve Viksit Bharat by 2047, I think it seems achievable. We all need to continue with our efforts. Our concerted efforts will result in success. I express gratitude for our chief guest, Governor RBI, Shri Shaktikant Das, guest of honor, Shri Nagaraju, Secretary DFS, dignitaries from FICCI, IBA, all panelists, participants, for making it a very successful event. Thanks to our knowledge partner, BCG, for this conference. I thank Team FICCI, Team IBA, and their leaderships for making this conference one of the flagship events of both the organizations in the larger interest of the economy. Thanks to the sponsors who have supported wholeheartedly, and thanks to Team Trident, thanks to one and all. Thank you very much.
Thank you, sir. And with this, ladies and gentlemen, we conclude the FIBAC 2024. Thank you all. Have a wonderful evening.